Hey everyone, welcome back to Corporate Decoder. Today CETY just filed an 8K report, and I am seeing a deal that signals a clear struggle for cash. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company just took on a convertible note for some much needed funding, but the terms are tough. So what happened here? Clean Energy Technologies Inc., or CETY as it is traded on the Nasdaq, entered into a securities purchase agreement on the 22nd of April 2026. They sold a convertible promissory note to Pacific Peer Capital II LP. This note has a principal amount of $406,000. Now here is where it gets interesting. The company did not receive the full $406,000. Instead, they received $357,280. This difference is because Pacific Peer Capital's legal expenses of $7,000 were paid directly from that purchase price, so the company actually netted out at $350,280. This is a common tactic when a company needs cash fast, but it signals they are paying a premium for quick funding. The agreement also comes with some strings attached. One major condition is that the company needs to get shareholder approval to issue more than 2 million shares of common stock to Pacific Peer. This has a deadline of May 1st, 2026, which is very soon. They also need to file documents with the CC by the 1st of June. Let us talk about the note itself. It matures in 12 months and carries an interest rate of 12% per year. That is a pretty high interest rate. The holder can convert this note into company stock. The conversion price is set at 85% of the lowest daily volume weighted average price over the 10 trading days before conversion. This is called a toxic convertible because the holder can convert at a discount to the market price, which can really hurt existing shareholders by diluting their stake. And there is a catch on conversion. The holder cannot convert if it would mean they own more than 4.99% of the company's outstanding stock. They also get to deduct fees from the conversion amount, which is another nibble away at the company's resources. This whole deal is being done under an exemption from registration because it was not a public offering. This is typical for these kinds of agreements where a company is in urgent need of capital. So to recap, Clean Energy Technologies needed cash and they got it via a convertible note, but the terms are not great for existing shareholders. They are paying a high interest rate, getting less than the face value, and the conversion price is set up to potentially dilute existing stock heavily. The filing is signed by Kambiz Marty, the Chief Executive Officer. Now, looking at this filing and considering the recent news about a Nasdaq deficiency notice and a capital raise which was reported around the same time this convertible note financing appears to be a desperate move to stay afloat. Companies often turn to these types of financings when they are struggling to secure traditional loans or equity investments. The high interest rate and the dilutive conversion terms are clear indicators of distress. This is similar to what we have seen with other struggling companies where such financing is a sign of difficult times ahead. The biggest concern here is the potential for massive dilution. If the stock price drops significantly, the holder of this note can convert it into a large number of shares at a deeply discounted price. This can wipe out value for current shareholders. For example, if a company like Kodak did a reverse split in 2021 to try and stay listed, it ended up delisting anyway, and holders saw around a 40% additional drawdown over the following 90 days. This kind of financing is a serious red flag. My biggest concern is that this financing is a band-aid on a deeper financial wound. Clean Energy Technologies is a small company with a market cap around $9 million and only 25 employees. They are in a tough industry, and this type of financing puts them at further risk. What I am actually looking for is a clear path to profitability and sustainable growth. And the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives.